Welcome to the weekly markets update. I'm Marit Sagarishvili. Today we are recapping what moved the markets during the week ending February 5th. Stock markets recovered from the last week's sell-off as investors eager to buy the recent dip poured back into the market. Renewed growth optimism and the expectation for additional fiscal stimulus also contributed to the market's broad-based gains. This pushed the major indices to record highs, with S&P 500 index gaining 4.7%. U.S. small-cap stocks, as represented by Russell 2000 index, also closed at an all-time high, gaining 7.7% during the week. Longer-term government bond yields continue to march higher, with the 10-year Treasury rising to 1.17% this past week. This has caused the Treasury yield curve to steepen farther, as short-term rates remain anchored by the Federal Reserve's near-zero interest rate policy. These yield curve moves are being driven by growing optimism of a strong economic rebound in the later half of the year. The short squeeze trade, which crippled the markets late last month, is starting to recede. The share prices of companies such as GameStop and AMC Entertainment are down sharply from their peaks. Retail investors took a stab at cornering the silver market, but they did not gain much traction after the commodity exchanges lifted the margin requirements. It is too early to conclude that we have seen the last of this trend. Thus far, 59% of the companies in S&P 500 have already reported results for the fourth quarter. Of those companies, 81% have reported actual earnings that are beating the estimates, higher percentage than the 5-year average. Tech giant Amazon had its first $100 billion quarter in sales, as record sales continued, with many shoppers buying online because of the COVID pandemic environment. Citigroup's Panic Euphoria Index, a composite that measures market sentiment and is often a great contrarian indicator, is now at its highest level on record. While the index is just a single data point, when you couple it with recent investor behavior, it has many wondering whether the stock market is currently in a bubble territory. Many professional money managers maintain a short position on US dollar, meaning that they're actually betting on US dollar to depreciate. After falling 13% since the last March, US dollar has actually appreciated about 2% over the recent weeks. The number of Americans filing for the first-time unemployment benefits declined to 779,000 this past week, slightly better than expected. While the Jobless Claims data is slowly improving, it is worth remembering that there are still 17.8 million Americans claiming some type of unemployment benefits. This shows that labor market continues to struggle, and its recovery still has a long way to go. U.S. economy added 49,000 jobs in month of January, modestly weaker than expected. There were also downward revisions to the prior months, which suggest that labor market continues to struggle due to the lingering virus. The unemployment rate fell to 6.3% from 6.7%, but this was largely due to a lower labor force participation. Thank you for watching. For questions, please visit our website, chemacretirement.com.